This is a stock that often trades on its cloud computing growth year over year, 35% that beat estimates. Is that the main takeaway for investors in your mind, or is there something else that you're focused on?
It was a solid quarter. Alphabet beat both on the top line and bottom line, Visible Alpha consensus. But the key driver here and the big beat was the Google Cloud business. Their margin came in at 17% for that business, and that's significantly higher than the Visible Alpha consensus coming into the quarter of 10.4%. So a real beat to expectations there.
Did this also, in your mind, change the narrative that Alphabet's a bit of not a laggard when it comes to AI, but not quite up to the level of its peers? On the call, they mentioned that AI is actually writing code now, or writing considerable amount of code. I believe it was 25%. And then there were also those concerns that AI would somehow take away from its search business. We didn't see that at all, in fact. Search was very strong. So does this enhance Alphabet's AI reputation in your mind? Does it change any of that narrative?
The scale is going to be a big issue for them. They are continuing to scale out the overall infrastructure of the cloud business. So I think that's going to be a really critical dimension to the whole rollout and cadence of that business over the next couple of years. That was something that the CFO spoke to on the call, saying it's going to be a fine balance between investing in the infrastructure and also managing some of the headwinds that can come from the costs around that, while also taking out and improving and optimizing the efficiencies, and really embracing the demand that's out there. So
Okay.
it's there are a lot of different factors here.
All right, we want to hit some other stocks, but very quickly. Are you surprised that Alphabet's not up even more after a big cloud computing beat? Was CapEx an issue that may be weighing on the stock a bit? Again, it's up. Let's not get confused. It's up. But the fact that they spent more on CapEx than the estimates were and guided they're going to spend more next year, is that a bonus to investors, or is that possibly a headwind on the stock a bit?
It's not 100% clear exactly how that's all going to play out. The key question that I think investors will need to take away is that next year, Google Cloud's margin consensus is expecting 13%. So the big question is that 17% that they put up in this quarter going to be sustainable through next year? Does that mean that earnings revisions could potentially come up because of that margin? Do analysts have to take their margins up to, say, 14, 15, 16%? That's the big question. Or is this quarter more of a one-off? I
Okay.
think that I walked away from the call not 100% sure how sustainable that 17% margin is.
Okay. That's a question for a lot of investors. But again, stocks up big right now, up almost 5.5%. I want to switch gears. What we saw from Alphabet, especially when it came to cloud computing, is that a read on what you're expecting from Microsoft at all? What can we take from that Alphabet report, specifically when it comes to Azure? Are there any insights you can see there?
Yeah, absolutely. I think the intelligent cloud business is going to be the important numbers that are put up. I think right now, based on Visible Alpha consensus, we're looking for $29 billion in revenue, $13 billion in operating profit, and a 46% operating profit margin. So those are the numbers to meet or beat. And I think as we look ahead, the guidance for Q2 is going to be very important too. That will be driven by intelligent cloud overall, total revenue of 70 billion, 30 billion in operating profit, and $3.23 for EPS. So I think, those also are the numbers to meet or beat. And right
Okay.
now in the quarters, what is so critical is beating not only in the quarter, but also providing guidance that exceeds expectations.